Welcome to Dave's Daily Crypto Take. Today is Monday, February 14th, 2022. Happy Valentine's Day. Let's take a look at today's charts. At number one, BTC is at $41,864.50, down 0.85%. Ethereum at number two, $2,856.05, down 2.23%. Tether at number three, $1. At number four, BNB, $392.42, down 2.72%. USD coin number five, 99 cents. XRP at number six, 79 cents, down 3.85%. At number seven, Cardano, $1.03, down 3.24%. Solana at number eight, $91.76, down 4.42%. Terra at number nine, $52.35, down 1.16%. And last but not least, Dogecoin at number 10, 14 cents, up 0.54%. Let's take a look at the crypto fear and greed index. Extreme fear can be a sign that investors are too worried that could be a buying opportunity. And when investors are getting too greedy, that means the market is due for correction. So what we got today is fear at 46. Yesterday was fear at 44. Last week was fear at 45. And last month was extreme fear at 23. Let's take a look at our 5 articles today. Article number 1 is here. How far might the Ethereum-killer tag go to benefit retail SOL buyers in 2022? Gary Vaynerchuk says 98% of NFT projects will fail after the gold rush fades. Here's why 2 experts think he might be right. Article number 3. Bitcoin's price may be holding up well, but the big picture is this. Article number 4. Is Marathon Digital worth a buy right now? And last but not least, article number 5. White hat hacker protects Coinbase from danger by spotting threat. All right, before we get into the articles, just want to say thank you so much to everyone that's been listening in to the podcast on Apple, Spotify, or Google Podcasts. Thank you so much. And if you're in the YouTube space, please like, share, and subscribe. It does help my channel greatly. So let's get into it, everyone. Article number 1 is, how far might the Ethereum-killer tag go to benefit retail SOL buyers in 2022? The coronavirus pandemic, paying the gas fee on the Ethereum blockchain are 2 things that are poles apart. However, the struggle to overcome both problems has been the same. And that's exactly where Solana enters the picture. In fact, crypto-billionaire Sam Bankman-Fried called Solana the next big blockchain of 2022. Notably, Solana promises to deliver the best of Ethereum, but faster and at a fraction of the cost. However, it is important to note that 2021 saw a significant uptick in meme coins like Dogecoin and Shiba Inu too. While these coins got a lot of attention and coverage, Solana was comparatively quiet under the radar. A look at the price trajectory, Solana got its fair share of fame as an Ethereum killer when it climbed up from an inexpensive $1.50 to $230 in November 2021. At the time of writing, the coin was trading at $96.51. The bears seem to have taken the lead for now. If SOL fails to bring in demand, the coin might go down further to its 1-month-long support of $86.54. However, if bulls find victory, the token might go up higher to face another resistance at $122. This would be an area where SOL might see investors going long. However, for a sustained rally, $140 needs to be flipped into support. Thereafter, the token can move upwards to face its 4-month-long resistance at $172. On the attached chart, the RSI and MACD favor the sellers. Even so, consolidation in its price range can't be ruled out. Really, an Ethereum killer? Well, while Ethereum is slowly moving to proof of stake, Solana from its inception has been using proof of stake consensus along with proof of history. That is to say, Solana is very fast and can process around 50,000 transactions per second at an average cost of 0.00025 per transaction. Moreover, the smart contracts in Solana are read-only and stateless. As of right now, there are about 400 projects on Solana. Interestingly, it has a great community of investors and developers. In fact, the founders and employees are very vocal and have a high interaction rate with Sol's users. All this goes to say that developers have been considering Solana for its technical likability. For instance, at the time of writing, the total value locked on Solana stood at $7.86 billion, with more than 50 decentralized applications building on it. This is a sign of the blockchain having immense potential to grow, and investors are believing in it. Gas fee concern. Even though the Ethereum network has been trying every trick in the book to scale better, the gas fee remains a hurdle. This is one of the main reasons why a large number of developers shifted to the Solana blockchain in 2021. In fact, at press time, Ethereum's average gas fee stood at 43 Gwei, while Solana's was just at 0.00025 per transaction. All is not well. While everything for Solana may look like a fairy tale, it is important to remember that Solana is not as decentralized as it should be. In fact, becoming a validator on the Solana network is really difficult. The barrier to entry is very high. Plus, most of the coins are also held in just a few accounts of the founders, team, and VCs. Surprisingly, the public holds a very small percentage of coins. Not to forget, Solana has no explicit roadmap. For this reason, investors who are willing to go long might consider looking into a project with more skepticism. The development activity looked a little complacent, for instance, at the time of writing. For now, a rally straight to $200 can't really be expected. Retail SOL buyers may take a call accordingly. So there you guys have it. How far might the Ethereum-killer tag go to benefit retail SOL buyers in 2022? Comment down below and let me know what you guys think. Article number 2, Gary Vaynerchuk says 98% of NFT projects will fail around and after the gold rush fades. Here's why 2 experts might think he might be right. So 3 points in this article. Number 1, in an interview with CNBC, Gary Vaynerchuk said 98% of NFT projects will fail. 2, Vaynerchuk is the creator of popular VeeFriends NFT series, the cheapest of which currently sell for about $41,000. And 3, 2 experts weighed in on Vaynerchuk's take and shared their predictions for the nascent Web3 space. Gary Vaynerchuk is not shy about his bullishness for non-fungible tokens, but he thinks there's a downturn coming for the sector. In an interview with CNBC, the entrepreneur and CEO of VaynerMedia likened the current NFT craze to the dot-com era stock market boom of the early 2000s. This is internet stocks 1999, said Vaynerchuk when asked about the current NFT landscape. I put out content every week saying that 98% of NFT projects are going to zero. Most of the behavior I see in NFT buying reminds me of the way people bought Beanie Babies. In March 2000, when all those internet stocks were grossly overrated and collapsed, Amazon was still sitting there at $7 or $8 per share. The same thing will play out in the NFT space. Vaynerchuk, who has 2.9 million Twitter followers, is the creator behind the popular NFT series VeeFriends. The price for a single VeeFriend NFT is currently 13.25 ETH, or about $41,000. He believes it's still the early days for digital assets. He urged investors to recognize that currently things don't make sense, but eventually the NFTs will become an influential and established market. Jonathan Victor, business development lead for NFTs for Web3 company Protocol Labs, agrees that things are just getting started for NFT space. Much of the utility, he says, will be seen once people stop focusing on the term NFT. People will stop talking about NFTs as NFTs, and the focus will shift to what they actually offer, Victor told the Insider. Instead of just fixating on the term, we'll look at what the digital objects can do for us. Because an NFT has built-in proof of ownership on the blockchain, Victor explained how vaccine cards could have been improved if they were NFTs. Then people could have proof of who issued it, who it was assigned to, and the date and time it was given, all while minimizing the risk of fake cards. For the same reasons, he expects event or sport tickets to transition to NFTs too. Soon, NFTs will just be things we use in time where everything will be digital and interpretable. Well, we'll eventually let's get excited about the term NFT and people won't even think about items as NFTs anymore. Similarly, Eric Chen, CEO of decentralized trading platform Injective Protocol, said there's a lot of noise in the NFT space that distracts from the utility of the digital assets. In time, he anticipates a broad adoption of the technology. The marketplace being overwhelmed, Chen wrote to Insider in an email, most of these NFT projects with little differentiation or innovation will likely die over time. NFT can be used, a term only familiar to a small group of users, Chen continued. We've already seen the metaverse concept and NFT sector being validated by large traditional tech companies. I think it'll slowly grow to become part of everyone's daily life. I think it'll be less flashy. Vaynerchuk predicts that the short-term greed behavior he is seeing in the space will lead to an NFT downturn. After the dust settles, he expects a handful of operators to come out on the other side to make remarkable returns. In 2021, the NFT market ballooned to about $41 billion in sales, almost the same size as the traditional art market. The celebrities and pro athletes continued to pour into the nascent Web3 space. Over the past week, there were over $535 million in NFT sales. So there you guys have it. Gary Vaynerchuk says 98% of NFT projects will fail after the gold rush fades. Here's why 2 experts think he might be right. Comment down below and let me know what you guys think about this. Okay, article number 3. Bitcoin's price may be holding up well, but the big picture is this. It's not been a good year for Bitcoin. In the world's largest cryptocurrency, less than 3 months ago, with BTC trading close to $69,000 on the charts, many expected the crypto to hit 100K soon. Alas, that didn't happen. In fact, Bitcoin dipped and depreciated, and did so for very significantly. While the last 10 to 14 days have seen BTC recover from its near-term lows close to 32,000, the cryptocurrency is still well away from touching its heights from a few months ago. Understandably, this has fueled a significant query in the minds of many. Is the crypto winter here? Is the Bitcoin ice age upon us after a bullish 2021? Ordinarily, a crypto winter can be identified by a series of red candlesticks on the monthly frame. According to some, it might just be too early to call anything right now. Then again, the crypto community and market aren't really famous for cold rationality, are they? A frosty reception. Consider the latest data from Google Trends, for instance, after flashing a reading of 7 between 7/11/2021 and November 13, 2021, search interest for the term Bitcoin winter climbed to 100 last week. Whether it is here or not, a lot of people really are keen to find out. That's not all. The fear greed index isn't giving a lot of confidence either, with a reading of 44 at press time. This, despite the fact that the scale has moved from extreme fear to fear over the last 30 days. The aforementioned data sets can be supported by the fact that of late, most are revising their initial predictions for Bitcoin. Furthermore, some are specifically suggesting there may be tougher times ahead. Consider this. According to Huobi Research Institute, Bitcoin has emerged to become an asset that is very sensitive to changes in liquidity. With the Federal Reserve's tapering policies contributing to a fall in the same, BTC will face a bear market, the report said. Furthermore, one of Glassnode's latest newsletters also argued that while it is hard to define a bear market for Bitcoin, there are some signs to indicate the same. A contrary position. However, the operative phrase in the aforementioned observations is this: hard to define. That is true, and it is so because there is no consensus as to what is a Bitcoin bear market. Consider the views of Juan Westenfeld. For instance, contrary to the assertion of others, the quantum economist analyst believes, quote, the price drawdowns are both hashtag Bitcoin all-time highs. This cycle has been very small and brief compared to previous bear markets. Arguing that the Bitcoin's price is holding up well, Westenfeld claimed that these drawdowns are more like mid-cycle corrections, he concluded. If that's how this bear market looks like, I take it. There are other metrics too, findings that seem to support the notion that winter for not so winter, better days might be ahead for Bitcoin. In fact, they back Westenfeld's assertion that the last 10 to 12 weeks are just mid-cycle corrections. Take the example for the short-term holders SOPR. After almost 80 days of the STH SOPR capitulating, the metric is finally above 1 on the charts. What this means is that investors are now selling Bitcoin in profit. The last time the STH SPR capitulated, it was for a period of 74 days. Finally, on the Bitcoin stablecoin supply indicator, the EMA7 bisected the EMA21 on the charts recently. Historically, this has predated a bull rally on BTC's charts. Is there even a right or wrong? Worth pointing out, however, that these metrics don't exclusively suggest that it's not a bear market for Bitcoin. After all, indicators like the whale exchange ratio have been above 85% since the beginning of the year. What this means is that there is no right or certain answer. It could be a mid-cycle correction or a major drawdown or somewhere in between. What is evident, though, is that the situation remains one that is quick to change. After all, who knows? Maybe the Fed will increase interest rates, maybe Russia will invade Ukraine, or maybe Elon Musk will tweet Bitcoin again. No one knows. The best course of action, ergo, is to look out and do your own research. So there you guys have it. What do you guys think about this article? Bitcoin's price may be holding up well, but the big picture is this. Comment down below. Let me know what you guys think. All right, before we get into the next round of articles, just want to say thank you so much to all my supporters. I've been looking at the analytics, and thank you so much to everyone that's been listening in to the podcast in America. Thanks so much, all you guys in the West Coast and East Coast. Big ups to all of you. If you do have friends or family that have Android devices, they can catch me on Google or Spotify. And of course, on Apple devices, Apple Podcast. And if you want to see the video version of the podcast, you can check it out on YouTube videos, Dave's Daily Crypto Take. All right, let's keep on going, guys. Article number 4. Is Marathon Digital worth a buy right now? The crypto sector has been highly volatile as of late. The sector has gone from what many termed a crypto winter to somewhat of a spring of late. Crypto prices are rebounding, leading to bullish price appreciation for most crypto miners. Following a big dip earlier this year, Marathon Digital now seems to be on the rise. As Bitcoin prices continue to fluctuate, crypto miners are likely to continue to see volatility. However, Marathon's unique business model has fans of crypto mining acting bullishly. Currently, Bitcoin's price is hovering around 45,000 per token. Just a few weeks ago, that price was nearing the $30,000 mark. In the larger context of things, Bitcoin hit 69,000 per token late last year, meaning this token has been incredibly volatile over the past few months. This volatility has bled into the stock prices of Bitcoin miners such as Marathon that has bled. Crypto miners have extremely high leverage to Bitcoin prices due to the fact that their revenues and cash flows are denominated in Bitcoin. While their expenses and debt are largely denominated in US dollars, this provides for volatility when the BTC USD exchange rate is fluctuating rapidly. Right now, mainly due to this volatility, I'm neutral on Marathon and other Bitcoin miners. Let's take a look at what investors are watching with this stock right now. Marathon Digital creating an impressive number of Bitcoins. Bitcoin mining is the process of validating and securing the Bitcoin blockchain. Via specialized computers, companies like Marathon can solve complex computational math problems first. To perform this validation, these companies receive rewards in the form of transaction fees and Bitcoin for doing so. According to Marathon's December report, these rewards have been lucrative. The company reported a rather impressive haul on Bitcoin production, mining around 484.5 Bitcoin in December. This amounts to approximately $21 million at Bitcoin's current valuation. Over November's numbers, Marathon's clearly picked up the pace with its mining activities. The company more than doubled its output over the previous month, which was only 196 Bitcoin mined. According to the December report, experts estimate that Marathon alone mined almost half of all Bitcoin in Q4. But that's not all. Marathon has announced plans to add another 78,000 mining machines to its network. This increase in mining capacity is likely to generate even more of a market share lead for Marathon. This is the key reason why many investors hold this crypto miner relative to its peers. So what's up with Mara's SEC subpoena and convertible debt offering? Mara's $650 convertible debt offering is burning massive cash to expand its mining operations. These notes carry an interest rate of 1% and will mature on December 1st, 2026. They also feature an initial conversion rate of $76.17 a share, above 40% of its current market price. Investors typically dislike convertible debt offering because it may dilute a company's equity and increase its leverage. However, Marathon's digital debt to equity ratio approached zero during Q3's end. It is expected to remain just less than 1.0 after the offer closes. Therefore, investors who believe Marathon's long-term plans likely will not be concerned. An SEC subpoena was handed down to expire a deal with Beowulf Energy and other parties to build a center in Hardin, Montana in 2022. The SEC appears to be looking into whether Marathon was in violation of securities law in issuing restricted common stock to carry out those deals. While this matter appears to be ongoing, this is a headwind some investors remain wary of with Mara stock right now. So what are analysts saying about Mara stock? As per TipRank's analyst rating consensus, Marathon Digital is a strong buy. Out of 4 analyst ratings, there are 4 buy recommendations. The stock has an average Marathon price target of $54, implying an upside of 100.5%. Analyst price targets range from a high of 65 per share to a low of 50 per share. Bottom line, As far as Bitcoin miners go, there's a lot to like about how Marathon is positioned right now. This is one of the largest Bitcoin miners in the world for a reason. The company is aggressively expanding, looking to capture as much of the market as possible. In addition, the company's Bitcoin holdings on its balance sheet are impressive. That said, there are issues with this company that investors continue to watch. What the future holds for the crypto sector, and in particular, Bitcoin miners, remains to be seen. However, this is a space that's best reserved for only the most aggressive investors right now. So there you guys have it. Is Marathon Digital worth a buy right now? Comment down below and let me know what you guys think. Okay, let's take a look at our main topic today, ladies and gentlemen. White hat hacker protects Coinbase from danger by spotting threat. A white hat hacker's prompt intervention saved Coinbase's sophisticated trading platform from disaster. Tree of Alpha, a white hat hacker, contacted Coinbase Chief Executive Officer Brian Armstrong to warn him that third parties could theoretically transfer Coinbase order books at arbitrary rates, which might result in a big payout for criminals. Coinbase announced in a statement shortly after the tweet that it had temporarily halted trading on its advanced trading platform because of technical difficulties. Following the resolution of the issue, Tree of Alpha commented and commended the Coinbase team for their prompt response, while Armstrong publicly expressed gratitude to the hacker for his timely assistance. White hat acumen prevents major catastrophe. Coinbase responded quickly to the hacker's alert, announcing that it had suspended trading on the site within 2 hours of receiving the public tweet from TOA. 2 hours later, the exchange restored full service for advanced retail, including the ability for users to reorder. TOA independently verified the fix by providing a screenshot of the exploit. Armstrong expressed gratitude to Tree for assisting the Coinbase team, noting that he loves how the crypto community supports one another. The white hats to the rescue. An ethical hacker or white hat hacker using hacking skills to find security flaws in hardware, software, and networks. Unlike black hat hackers or the malicious ones, white hat hackers adhere to a set of moral principles when doing their thing. Numerous white hat hackers began their careers as black hat hackers. The terms refer to classic Western flicks in which heroes wore white hats and villains wore black hats. While this type of cooperation does not appear to be widespread, it does occur. White hat hackers have also aided in the defense of other cryptocurrency firms against potential attacks in the past, sparing the site and its users significant losses. Penetrating defenses. Last year, a hacker stole $612 million in assets from Poly Network, but after weeks of negotiations, nearly all of the funds were restored. The hacker said he carried out the attack in order to teach the network a lesson. While the classification of Poly Network hackers as white hackers is debatable, it has been demonstrated that some hackers act with only good intentions. For instance, in August 2021, Paradigm's security researcher, Sam Bankman-Fried, aided in the resolution of a $350 million SushiSwap DEX issue. Last week, another hacker aided in determining what happened with Wormhole, a $320 million breach attack that was probably the most significant to date. Meanwhile, hackers are rewarded for their contributions to maintaining a clean, transparent, and trustworthy crypto environment. White hats are gaining popularity as a result, and an increasing number of cryptocurrency companies, including Binance, the Ethereum Foundation, EOS, and Kraken, offer rewards for spotting security weaknesses. So there you guys have it. White hat hacker protects Coinbase from danger by spotting threat. Comment down below and let me know what you guys think about this article. Okay, let's take a look at the prices one last time before we head out. So we got number one, BTC, $41,929. Ethereum, $2,854. Tether, $1. BNB, $392. USD coin, 99 cents. XRP, 79 cents. Cardano, $1. Solana, $93. Terra at $52. And last but not least, Dogecoin at 14 cents. So there you guys have it. Thank you so much for making it this far into the Crypto Take podcast and video. Again, catch me on Apple, Spotify, Google Podcast, and in the YouTube space, Dave's Daily Crypto Take. Other than that, I hope you guys have a great crypto day, and I'll see you guys in the next one. Peace.